Good evening and namaskar. Today we'll take a look at an agri-tech company, Dhanuka Agritech Ltd. With reference to its Q1 results. Q1 results have been good. Generally, I select only if the results are good. The management consists of Ram Gopal Agarwal, chairman, then Mahendra Kumar Dhanuka, managing director, Harsh Dhanuka, whole-time director, Arun Kumar Dhanuka, executive director, Rahul Dhanuka, executive director, Mridul Dhanuka, executive director, like that. So mostly we can see that the top management is in the hands of Dhanuka family members. Dhanuka Agritech is an umbrella company for the business of agrochemicals, fertilizers, seeds, etc. The product range of the company includes weedicides, herbicides, insecticides, and so on. Lot of products are there, and they are obtaining some. They used to obtain some raw materials from China also. When China stopped production, what happened? We don't know. Now the Dhanuka group is doing well. See, in 1 year, Chinese production stopped, so therefore there was a huge increase in the raw material costs. I think 2017-18, something like that. Now the Dhanuka group is producing herbicides, weedicides, insecticides, and so on. Let us take a look at the Q1 results. The total revenue is 381 crores. Quite impressive increase with reference to Q1 of last year. Q1 of last year was 223 crores. Now 381 crores. So year on year increase is 71%. Now if you compare quarter on quarter, last quarter was 236 crores. Now 381 crores. So quarter on quarter improvement in total revenue also is very impressive at 61% quarter on quarter, 71% year on year, 61% quarter on quarter. Quite impressive. Net profit. I am not going to go through other details. Nothing special about them actually. 52 crores is the net profit for Q1 of FY21. Sorry. 39 crores only was the net profit in Q4 of last year, and 15 crores only was the net profit in Q1 of FY20. So the net profit increase is very sizable, very impressive at 253%. 253% year on year and 33% quarter on quarter. See, total revenue increase is 71% year on year and 61% quarter on quarter. Net profit increase is 253% year on year and 33% quarter on quarter. EPS similar, 10.89. Previous was 82, and its Q1 of last year was just 3.08. So increase is again same thing, 253%, 254% year on year and 33% quarter on quarter. Then equity 9.5 crores, something like that. Face value rupees 2. So on a face value of rupees 2, the EPS is 10.89. It is quite sizable. So market price is 877 and price earning is 20. 52-week low was 261, 52-week high was 935. So it is somewhere in between, closer to 52-week high. It may go to 52-week high again. Now if you look at the previous 5 quarters, those results were somewhat unimpressive, except in one quarter, that is September 19 quarter. had very good sales of 403 crores. But other than that, the same thing, 220, 250 like that. So net profit also was something like the 39, 27 crores like that, except that September 19 quarter. Now that gives rise to a doubt whether this also is 1 and 5 quarter, something like that. Hopefully it is not. The rains are good. The IMD has forecast rains as good. So now anyway, Dhanuka Agritech has started performing better. See, in fact, last 5 years results were dismal. The growth was dismal. It was okay. Sales and profits were okay, but there was no growth. Actually, 2018-19 was an exceptional year due to closure of 1,000 units in China. So the price of raw material has increased disproportionately, which the company could not pass on to the farmers completely. That is in 2018-19. Now we have crossed 2018-19, 19-20 also, we are in 2021. So now the rains are okay. So in 2018-19, company has completed a buyback of 15 lakh equity shares at the rate of 550 rupees each. Like that. Now, if you look at some of the strengths of the company, EPS growth has been reasonably good in the recent times. Net profit and net profit margin have been growing recently. The debt is very low. Book value is improving. FIIs and other institutions are increasing their shareholding. Price momentum has been very strong. That it means investors are having good impression about the company. The past price performance, see, 1 year before, the price was 403.5. Now it is around 850, some 834, 35 like that, 106% gain. In 1 year, 106% gain. In 3 months, if you see, 3 months before also it was at 445, now 834. The percentage gain is 87. But 3 years if you see, there was no gain. 1 year, okay. 3 months, okay. 1 month also is okay. But 3 years, before 3 years, it was dismal. It was 820 and odd at that time also, now also 834. So no increase in 3 years. 1 year increase is good. 3 months increase is good. Shareholding, if you see, it is okay. 75% is promoters. There is a pledge. 14% pledge is there. FIIs, etc., negligible. DIA is 16.44%, etc. Mutual funds are having some holding. Market cap is slightly more than 4,000 crores. Price earning for the last year was 28. Book value is 148. Book value is increasing steadily. Dividend 600% for the last year. Industry price earning was 43, but company's price earning was 28. EPS trailing 12 months was 29. Price to book is 5.66. Dividend yield is 1.43. Face value is 2 rupees. Okay, overall good, but recent performance only is very good. Dhanuka has got 3 manufacturing facilities, Rajasthan, Gujarat and J&K. One broker says Dhanuka's asset-light business model, superior return ratios and recent product launches. Dhanuka is creating lot of new molecules which are very useful for agriculture. So R&D is good. Dhanuka will navigate through the pandemic with the help of a normal monsoon. Strong distribution of products and product brand recall among farmers is very good. So it had a healthy performance in Q4 FY20 also. Of course, its fortunes are dependent on rain and agriculture. So, but it is producing lot of new herbicides. Its 5 herbicides are in robust demand in North and South India both. 5 launches are there in FY21. So, what Dhanuka says about itself, that also we will see. It is one of the leading agrochemical companies listed by Forbes magazine under the category of 200 best under a billion companies in Asia Pacific. So in one category it is one of the 200 best. It has been awarded as a Company of the Year in Agrochemical category by Federation of Indian Chambers of Commerce and Industry in 2018. Many awards and recognitions are there. The company has been recently recognized as a great place to work for the year 2018-19. It has got pan-India presence, marketing offices are everywhere, 3 manufacturing units are there, 40 warehouses are there, 14 branch offices are there, 7,200 distributors are there, 75,000 dealers are there. So more than 1,000 techno-commercial staff are there. Good, very strong R&D division is there, accredited by so many things. The factories are at Sanand in Gujarat, Udhampur in J&K, and Keshwana in Rajasthan. Now it wants to digitize many of its operations. It has produced an new app, which can be downloaded from Google Play Store, called Dhanuka FL app. So its customers find it very easy. All people who use it find it very easy. Now you have seen, it is improving in the recent past. Last 5 years was not good. Last 1 year was okay. Last 3 months was good. Last 1 month was very good. And of course it can improve. Sales should improve. Now sales have improved in the latest quarter. That is correct. Sales have improved to by 71% year on year, latest quarter. Now, if this way it goes, Dhanuka can progress on the price front also very well. In the price front, during the last 3 months, it has gone up like anything. So, we can take a bet on that. I will be back with you with another very good company. Dhanuka has done well in the latest quarter, that I can say. In the previous quarter, there was an indication of improvement, but in the latest quarter, the improvement is very sizable. But if this way Dhanuka continues, it is well worth having in our portfolio, if it continues like that. Let us watch. Thank you.